Hello and welcome back. I'm Jay Fagan with the Maddox Group. Another year has ended, a new year has begun. We're putting away the Christmas and holiday decorations. We've dusted off the finery for our New Year's Eve celebrations. And as those get put back into the closet and back into mothballs, let's dust off and stretch those tax season muscles. Get ready with me as we prepare you to have an outstanding tax season this year. Let's get stuck in. So we're kicking off a new year. You're hard into implementing those New Year's resolutions. You've got to dust off the shoebox, get all of your documents together, and you're thinking about that dreaded nightmare that comes around this time every year, tax season. How do I get going? What do I need to do? What matters? And with this year upon us and the new OB3 tax bill, there's a lot more uncertainty, a lot of new documents that are going to be requested, and a lot of new forms that don't quite exist yet, but will in the new year. So there's a little bit of guidance that's not as usual and customary as we kick off this season. And so whether you're self-preparing this year or you're working with a tax professional, we've got a great checklist to help you organize, help you get off on the right foot and make this a great and successful tax season for you and for the people you're working with. So as we get started here, there's just a few things that make every year fantastic and just as smooth as they can be. And to start, if you don't already set up your account, your free taxpayer account with irs.gov for the federal side and in your respective state, if you have a state income tax, they generally have a state web portal for individual taxpayers and business taxpayers. Here in California, the Franchise Tax Board, your MyFTB account is an absolutely wonderful tool. So start out there. If you aren't already registered, get registered on those accounts. We're going to be rolling out a video on how to do that soon, so look forward to that. Just as an aside, if you don't have an ID.me account for a variety of reasons already, get one. It's a fantastic tool that helps that setup process go much smoother. And you can use it for other things in the government like the Social Security Administration as well. In your irs.gov account, you're going to see all of the documents over the coming year that get uploaded on your behalf, transmitted on your behalf from other people, like W-2s. You'll start to see that information come in. You'll see it in prior years as a great reference. You'll also see anything that you might owe or any collections letters or other statements that might be coming your way that you might have missed in the mail. We all have our own concerns with the Postal Service these days. It's also where you can set up your power of attorney if you need one, and it's also where you can set up your ID PIN, your identity theft protection PIN, which we're really starting to recommend more and more for a vast number of taxpayers. Usually you just set them up if you had been a victim of identity theft, but it seems these days almost everyone has. So an ID PIN is a great thing to have for your federal tax return. You need a new one each year, and you set it up with your taxpayer account at irs.gov. You do need one for each taxpayer who's filing. So if you're filing joint, you're going to need two of those if you want the maximum protection. So you also want to review your prior year's tax return just for reference to help you compile your documents and think if something's missing, jog your mind. You're going to want to take a look and confirm that your mailing address, your contact information is updated and correct with all of your employers or people you do business with, and that your current mailing address that you want IRS and your tax agencies to use is transmitted correctly on your return. Gather together Social Security numbers and dates of birth for yourself, your spouse, and any dependents. If there's been a change this year, this past tax year, in marriages, divorce, birth of a child, you purchased a home, make sure you record that, you have that in your checklist of items, and you have all the relevant documents for that. It's important to note IRS is no longer going to provide paper checks for refunds with certain exceptions, but in very few cases. So direct deposit is going to be the way to go if you have a refund. So make sure that you have your bank name, routing number, and account number available when you're ready to file. Again, some of that's for identity theft protection, so we know it's going to the right account and the right taxpayer. Also, if you got a tax refund, particularly a substantial refund, that means you gave the government an interest-free loan. And if you're not already working with us, let's talk this year to see how we can help you reduce that in future and keep more of your money each pay period. Finally, if you've moved during the year, include the dates of residence in each respective state and city that you resided in throughout the year, making sure we can fully understand your tax home and any changes that may be of benefit to you. If you get all these documents and information together early on, it's going to help a smooth and efficient tax season proceed throughout the course of the year. Now, in our checklist, we've broken things out by earned income, retirees, self-employment, and so on. I'm going to go through a few of the items on the checklist. Because of OB3, there are some changes. Please review all of these, and there may be some things that are out of the norm that exist not reflected in this checklist. Always be sure to talk through your particular situation with your tax advisor. If you're an earned income employee, as is a great majority of Americans, you're going to receive W-2 forms from all of your various employers if you have more than one. And these days, many households do. This year, because of OB3, there's some things that won't be on the W-2 that will be next year. And so you're going to want to make sure if they apply to you, you've gotten the information together from other sources. And that's if you're an eligible overtime recipient and you received overtime pay throughout the course of the year and you qualify for the new overtime income deduction. Overtime pay is not going to be broken out on the 2025 W-2. It will be in 26, but it's not going to be in 25. However, it's still eligible for the deduction. So you're going to want to make sure you have your last pay stub this year that should have that information broken out. And just a reminder, it is the overtime premium that is the deduction. So if you get paid time and a half, let's say $20 an hour, time and a half is $30 an hour, it's the $10 an hour premium that is the deductible amount, not the $30 an hour. If you received tip income and you're a qualified tipped employee, again, you're going to want that information documented separately. It won't be on your W-2 in 2025. It will be in 2026. So final pay stubs or report from your employer or employers to help make tax season run smoothly. Generally, if you have a bank account over the last several years, you've received 1099 interest statements. They come from your mortgage provider. They come from your savings accounts, your checking accounts if they have an interest, money funds that have interest-bearing accounts. And generally, they are only provided electronically now. And for many banks, they're only provided if the amount exceeds a certain dollar limit. Now, as far as the IRS is concerned, anything under $1 isn't taxable. But your bank may have set a threshold higher, $5, $10, $20 we've seen in some cases. So check your last end-of-year bank statements and your end-of-year bank records just to confirm what those interest earned amounts were so that you can report them properly on your tax returns. If you are self-employed and you are qualified sole proprietor, LLC partnership, you should receive 1099 NECs for the work that you did on behalf of your clients. However, just because you don't receive one doesn't mean the income isn't taxable. We've got a great video on that. Take a look up here on how to get your business books together. But if you have those, make sure you've compiled them all. However, it's most important to note that they're really for a reference because ultimately it is your total business income, not just what's reported on 1099s, that is taxable. But they're a great reference to help you put together your business books. And also, if you have a brokerage account, you've sold stocks or bonds or funds, 1099-B forms. These are very important forms. You want to make sure you provide all pages of the forms to your tax advisors. They often get corrected, so you tend to not want to file early if you receive those because they may be coming out again late April or May with a correction, sometimes at the end of March, just before the filing deadline. So keep an update on your portals with those accounts so that you get the most current, correct information. But it's important to note that your brokerage firm doesn't always track your basis, or they may not track it on the 1099-B, your investment basis, what you paid for the stocks, bonds, or funds that you have that you sold throughout the year. We see this particularly in RSUs, restricted stock units, or ISUs, individual stock units for employers and employees that work for publicly traded companies. Their basis is tracked off the book, so to speak, in a separate area of their brokerage account, and the brokerage will provide a supplemental basis form. So if any of that may apply, or if perhaps maybe your brokerage was taken over by a larger firm and that basis may not have transferred directly on the individual transaction, but was kept, again, in a supplemental form, look for the supplemental basis reports each year. They are very helpful in reducing your tax liability. For our retirees, you're going to have your SSA 1099 if you receive Social Security. 1099Rs are for retirement and income distributions, and 1099 DIV are for dividends or capital gain distributions received from your funds. You want to make sure you get all those together. Again, these generally come in digital form now. They're not usually mailed unless you've requested it. When we get into our self-employed persons, well, these are partnerships, passive income farming operations, folks that get K-1s from other partnerships in which they're limited or general partner in, or S corporations, trusts, or estates, or passive investments like oil and natural and gas. You're going to want to make sure that you have all of those forms together and they are the final forms before you file. You want to, again, make sure you have all the supplemental information together, particularly around these K-1s. We see these a lot with oil and natural gas where they file in multiple states, or some large real estate partnerships, they file in multiple states, and they may be filing PTET, or pass-through entity tax, on your behalf to that state. Now, you might not have a filing requirement in that respective state just because a K-1 was issued, but if PTET was contributed on your behalf, you may be entitled to a refund of that. So you want to make sure that that full K-1 form is provided and you prepare all those state returns that are required or beneficial in the case of you don't need to file, but you'd get a refund. For self-employed sole proprietors, single-member LLCs, married partnerships, you definitely want to make sure you have your income and expense all laid out, your books as clean as you can. And if you don't understand how best to prepare those, we've got a great checklist and video on putting the chart of accounts together and doing small business books. We always recommend you use a great general ledger, a software tool wherever possible, particularly one that's connected to your business bank accounts. It just saves time and effort on your behalf, and that's money in the bank. But if you don't have those together, great place to start is just the Schedule C form or the Schedule E form. Just look at those categories and take a look at your bank statements and whatever records you have and put that money in the respective buckets where it's supposed to be. It'll help the process go much smoother for you and your tax advisor if you're working with one. You also might have contributions to self-employed IRAs, simple or solo 401k retirement accounts. You might qualify for contributions to self-employed health insurance plans, as well as contributions or distributions from health savings accounts. So look for all of those various forms and documents to support those vital tax deductions and important information. If you're a homeowner and you still have a mortgage, as many Americans do, you're probably going to receive 1098 forms. You may receive more than one because your loan might have been sold or transferred to a different loan servicer throughout the course of the year. So always make sure you have all of the 1098 forms. And if you have an escrow account for your property taxes and property insurance, you probably have a 1099 interest statement coming as well from that mortgage broker. Remember, the first $750,000 of mortgage interest is subject to an itemized deduction. Everything above that is not. And that's for also important to note, if you refinanced or you took out a home equity line of credit throughout the year, make sure you provide those statements because there may be some tax implications from doing so. If you purchased or sold a property during the year, we really want to make sure you have those disclosure statements, closing disclosures. Used to be called the HUD-1 form. Now they're the closing disclosure. Very important forms from the purchase and the sale. Helps with capital gain. If you're going to use it for business purposes, great stuff to have. Also, if you did get solar, a battery, Powerwall, or other home battery installations done before December 31st, or other home efficiency improvements installed before December 31st of 2025, and therefore can still take advantage of those credits, make sure you have your receipts and documentation in order. There's just some other miscellaneous things that some taxpayers may have, particularly if they itemize. If you received a state income tax refund or some unemployment compensation, or for example, in California, paid family leave, you'll receive a 1099-G. That does still generally come by mail. You should receive health insurance forms if you've had qualified health insurance throughout the year. Now, if it was from the exchange, in which you might have been subject to receiving advanced premium tax credit, you would receive a 1095-A. And those are almost always delivered electronically now. If you received your health insurance through an employer, or off the exchange, you'll receive a 1095B or C. And those forms are really useful just to ensure that you don't get levied the penalty like we do in California for not having health insurance. If your state doesn't levy a penalty for not having health insurance, they're just useful information to have, but they're not necessary for your tax returns. Again, a new thing for OB3, if you bought a new car in 2025 that was assembled in North America and you have a loan on it, the interest may be deductible, again, depending on your adjusted gross income thresholds and your filing status. So you want to make sure that you have the purchase agreement for the purchase of the car and the final year's loan interest paid for that car. Same thing goes if you bought a used car and you're looking for the sales tax deduction. If you're itemizing for your state and local taxes, sales tax on a new or used car could be a potential itemized deduction, and that purchase agreement matters. For charitable contributions, as always, you want to make sure you have your receipts, your date of the contribution, ideally the tax ID so you know it's a verified 501c3 or other eligible charity. You want to make sure that if you gave non-cash contributions, so in this case, donated items or goods that had a value greater than $500 for tax purposes, that you have the really good particular information about this. The date you purchased it, ideally month and year, the initial cost or best estimate you have of what it cost for the goods that you purchased, and what their appraised or thrift store value is at the time of the donation in order to justify and sustain that donation. Anything over $5,000, you do need a formal appraisal. For dependent care expenses, so daycare, childcare, that sort of thing, qualified dependent care expenses, we do need the name, address, phone, and tax ID for each of the providers. And depending on their situation, they may be a household employee and you would have need to run payroll for them. So if you're unfamiliar with that sort of thing, or you have questions about how it's being managed on your behalf, don't hesitate to reach out to us. Household employees, they're not rare. Not everyone has them, but they're relatively easy to manage if you just have a good system set up. Again, I just want to mention those health savings accounts. We love them. We recorded a video on them. You will receive a 1099 SA and a 5498 SA, depending on whether you've received distributions or made contributions to your health savings account throughout the year. You'll receive similar forms around flexible spending account distributions. Again, those aren't taxable if they're for qualified medical expenses. If you've traveled for medical purposes, you're looking to itemize your medical expenses, you've had substantial medical expenses. Again, we want to get receipts, documentation for all of this. It's important to note that the medical expense deduction, if you're an itemized tax filer, is a difficult one. And it's because it has a 7.5% floor. 7.5% of your adjusted gross income is not an eligible deduction. So it's only the expenses that exceed that 7.5% of AGI floor that you can deduct, which, with medical deductibles being what they are, isn't an insurmountable threshold for a lot of taxpayers these days, and the high cost of medical care in our country. We understand that. We don't wish it upon anyone, and so that's a deduction we don't generally see, and we're happy that we don't see it. But do get your documentation together if you've had substantial medical expenses, and we hope you're on the mend. Lastly, here on some of the kind of unusual and miscellaneous is casualty and theft losses. They're now limited for federal tax purposes to only those losses incurred in a federally declared disaster. So you want to make sure that if you have some losses, and I'm terribly sorry that if you've gone through any of that, that you've got a confirmation that it was a federally declared disaster, and then get the documentation together and we can make sure you can claim that deduction. If you're an educator, there's some new information that's going to be coming out soon on the expanded educator expense in 2026. So look for more updates from us on that. This is the time of year here at the end of the year where you're giving gifts. And remember, gifts of under $19,000 to an individual beneficiary do not require a gift tax return. They are completely tax-free, no tax deduction, of course, but completely tax-free. And there are some great rules around that where, for example, a married couple can combine and give $19,000 apiece to a respective beneficiary. You can front load for a number of years. We'll put some information out about that in a video to come later this year. We also want to talk more about 529 plans and, again, those educator expenses in the coming year. So look for that information. Lastly, I want to talk about estimated tax payments. If you are a taxpayer who is required to make estimated tax payments periodically throughout the year, few things to note on your return. Remember, you want the date paid and who you paid, federal and or state, for each of the payments that you made. Those installments are generally due. There's 4 periods a year. They're generally due on the 15th of April, the 15th of June, the 15th of September, and the 15th of January of the following year. So we're coming up on that fourth and last estimated tax payment deadline for 2025. So if you haven't got your estimated taxes in, now's the time to do it. If you're curious about what to calculate there, don't hesitate to reach out. We'd be more than happy to go through that process with you. If you had your 2024 tax refund applied to your 2025 taxes, make sure you note that on your tax return or with your tax advisor. And if you made any other additional payments throughout the year, again, make sure that you note those so that they are reflected. It's a good reason, by the way, to have that online tax account with the Franchise Tax Board or your respective state agency and, of course, the IRS, because you can verify that those tax payments were posted correctly to the right tax year. And if they weren't, we can reach out and get those adjusted for you. A lot of information here, some of it a little bit dull, some of it I hope it was exciting for you. This is the joy and challenge, of course, of tax season each year, going through these documents, going through these numbers. It's something I love. It gets me out of bed every morning. But more importantly, what gets me out of bed is being able to help individuals, families, professionals, business owners, outstanding American taxpayers just like yourself to navigate these and any other aspect of their financial life. We love helping you achieve transformative growth and success. So if you aren't already working with us or a tax professional advisor who's working on your behalf, you have a great relationship with, again, don't hesitate to reach out. We'd love to welcome you aboard. I'm Jay Fagan with the Maddox Group. Look forward to more great information from us throughout this year. We wish you an outstanding, successful tax season for this coming year. Thank you again for investing your time with me. Allons-y.